So we've been talking about doing this for a long time, my friend.
Yeah, we have.
I think the first time we talked about doing this was like the last week of March of 2020 is when we first said, hey, what if we did this? Which is about...
pretty much in conjunction to the first time we talked.
Yeah, seriously.
Ever.
Which is crazy to think about. It just feels like a blur of how long that's been.
Yeah, I think the last 5 years feels like a blur regardless.
Some sort of fever dream.
Yeah, no, exactly. And I mean, the fact is that like you were kind of one of my very first real like connections in the industry.
We should give you for me as well, but we should give some context as to how that happened. Because if memory serves, you looked at the Stratford County board list for new members and cold called me.
So back, I mean, I started, so I got my NMLS license in like January of 2020. And then I closed a couple of loans, then March 2020, we all know what happened then, right? The world shut down and it was like, okay, I'm a brand new loan officer. I don't have connections with people. How am I gonna actually, meet realtors? I can't go out, everybody stay in their house. You're not even allowed to go to a closing. You can't, how do you do this? And then it just kind of kismet that Stratford County Board of Realtors, I was an affiliate member. You had just onboarded with them as a new realtor and they sent out a list. Hey, here's all the new realtors that just came on. And so I thought, well, I'm going to shoot my shot. And I just went down that list, probably like 30 realtors on that list. And I went through it and I looked up because they just gave us their names. That's it. They didn't give us contact information. They said, these are all the new realtors. So I went and I just, Googled every realtor on that list, found a phone number, found an email address, and just sent out emails to every single one of them. Hey, I'm Bill. I work, blah, blah, blah. I'm a loan officer. I'd love to get in touch with you and do a Zoom call, or something. And I made some phone calls too. And you were one of two out of 30. All right. You were one of two realtors that actually responded to me.
Well, this is very clearly before I understood to not
now you know better.
Take ice cream from random loan officers.
Yeah, you know much better than to respond to loan officers now. I just got lucky, got in there right before you knew what you were doing. And we had a conversation. We talked about like literally our first call. I remember talking on our first call about how you were like, I really want to do like podcasting. I want to do some video content. I want to do all this. And of course, at the time it was like when we can be in the same room as each other again, right?
Yeah, seriously,
that was the big part of it.
March of 2020 and just that part of the pandemic feels like a million years ago. And I can also close my eyes and I'm right back.
Yes.
Remember like 16 would be dead every day when you're driving up and down it. But Portsmouth was a ghost town. Like it was a crazy.
Yeah. The highways were dead. Everything.
It was
and gas prices were cheap.
Yeah. Right.
I long for the days of COVID. No, not really.
No.
There were some silver linings.
It was a time. It was a very interesting time for, I think, both of us getting started and getting established because
I think it was probably one of the most beneficial things to my career, believe it or not, as starting in that time frame, because you sort of had to, eat or be eaten.
Yeah.
Right.
Because you had to move on. You had to think on your feet.
You had to think on your feet. You had to find different ways of doing things. Like this is, things like Zoom calls were just a thing, like virtual stuff, everything online, it just became that. And so we kind of got forced into doing it. And I didn't have any of the old habits because I hadn't been doing it before. Right.
Yeah.
I mean, I had a couple of months of onboarding where they were like, yeah, you need to go to these events and stuff. And then the events didn't happen anymore. I remember going to a chamber event and like, it was right when they were starting to say, you shouldn't shake hands. And we did like the whole elbow touch thing at the event. Yeah, like that's where I started, and then all of a sudden it was like you get nothing. How do you create a business now? So
let's take one step back from you getting started. Where did you come from before that?
I was a restaurant manager. I
fun.
worked. So starting in 2007, started working in restaurants and worked my way up into management. And I really. God's honest truth, thought that was my career path. I was going to work in restaurant management. I was working for corporate chains and stuff. I was like, I'm going to be, I traveled, I worked, in New Hampshire, I worked Concord, Manchester, Portsmouth. They moved me around. They moved me to Bangor, Maine.
Whoa.
I mean, we're sitting in South Portland right now.
Yeah.
Two more hours north of here. And that's where I was, they moved me for a year and a half to work. I mean, I was traveling all over the place, managing restaurants. And I was like, oh, I'm going to go into kind of, district management, and who knows, I can go into corporate. Like, that was my trajectory. That was my life's trajectory. And then in March of 2019, I became a dad. And realized that one weekend off a month and working until 1 or 2 in the morning or going in at 4 or 5 in the morning was just not going to be conducive to the family life that I wanted.
100%. That makes sense.
So I said, all right, my daughter's born in March of 2019. I'm going to give myself 5 years before she goes to kindergarten to figure out, what do I need to go back to school? I can't keep doing this career, and be the kind of parent that I want to be.
100%.
So I said, I need to find something else. And it just so happened that my parents were buying a house in fall of 2019 while I was in the middle I was interviewing with to be like an insurance agent at Liberty Mutual, or I was like I was like, do I go to be, work in medical, go get a certification and be a phlebotomist? I don't know. Like I wanted to do something though, that I knew could have some sort of normalcy to a schedule. Little did I know that the world of real estate, there is absolutely no normalcy.
You make your own hours.
But right. There's flexibility, right? But so I was doing that, and my parents were buying a house. They were buying their house and using the lender that I used to buy my house. And she said, and so at their closing, she said, oh, how's Bill? And they said, oh, great. He's trying to find a career change right now.
Yep.
And she said, really? I need to talk to him. And she called me up and we had a meeting, and everything she was selling, I was buying.
Yep.
And it was, tell you what, going from a secure salary job that I knew everything, what I was making every single week, and I had benefits and I had this and I had that,
to jumping off a cliff,
literally jumping off a cliff into the world of 100% commission income.
Yep.
Was scary. And I ended up liquidating the 401k that I had at the time with the restaurant to do it. And that was, scary because that was literally my entire life savings at that point, and I would do it all over again though. 100%. It was so worth it. And, coming in, so like in December 2019, I onboarded, I had to do training. I finally got my license in January, and then I was off to the races. And, the risk of being cliche, the rest, as they say, is history.
Getting in right before COVID was just such a strange experience. I'm sure it was for you too.
Well, not just getting into lending in the real estate industry, but getting out of restaurants.
Yeah.
Think about what restaurant employees, management, servers, cooks had to deal with during COVID. Like they stayed open, takeout only at first, right? And then it was outdoor dining. I literally got out months before like a few months before their whole world exploded. Right. Because I have friends, of course, that still do it. And the horror stories they told me of having to wear the masks all day and everybody's still in the kitchens. I'm thinking I had a newborn baby at home. She was under a year old. Well, she just turned a year old, actually, I think when the lockdown happened. Like, how would I have been able to go to work and then come home and not think that I caught something, or, because we didn't know anything then.
Absolutely.
So at that time I was so grateful that I had made the change. Like it was worth every bit of it. But tell you what, like I said, under fire, learning half my learning happened over Zoom calls, and it's like calling people, how do I do this? Because I couldn't be in an office anymore.
Yep.
But it was great. But what about you? I don't know if you ever actually told me like how you decided to get into real estate.
It's funny because our stories there's differences obviously, but there's so many parallels as well. So my first dipping my toe in of interest was when I was in the Army. And my wife at the time was working, I should say my wife was at the time, she's still my wife, 8 years on now, but she was working as a maintenance coordinator for a little real estate office. So they did rentals. There's a lot of rentals around military bases, and your toilet's broken, that sort of thing. They call her, she coordinates. And the office she was working at, I don't even remember what it was called now, but they started having her take the coursework for her Georgia license. She was like, this isn't really for me. But one day when I came home, it's like the middle of the summertime, sweaty Army guy stuff really. And she's like, you would love this. You would thrive in this environment. I said, I'll never do that. That's not me. That's never going to happen. And she's going to watch this and get a really great laugh out of that. But I talked to a lot of people at that point when I was in the military, and my kind of initial interest was on the investment side, because there's a lot of folks who they're in the military, they have their family. When they get assigned to a duty station, they buy a house when they show up, they live there while they're assigned there. And then when they PCS, which is every 2 to 4 years, you move stations typically in the military, they don't sell it. They hold on to it. They rent it. They buy another house at their next duty station. And I would talk to some of my NCOs and they'd own 7 houses. It's like, whoa, okay, that's very interesting. How do you do that?
A VA loan.
Yeah, exactly. Right. And so I started kind of going down that path. And then when I came home from the Army, I started my little kind of get on my feet job, and started trying to figure out what I wanted to do. And I always thought my path was going to be mechanical engineering. I had an interest in it.
Did you do that? Like, were you your career in the military was dealing with that kind of stuff?
No, not even a little bit. I had the most dumb guy job in the Army, and anyone listening to this who has the context will know, but I was an infantryman, and which is just
your grunt.
Yeah, exactly.
Yeah.
And so came home, thought that's what I was going to do. And then I talked to some people and realized, oh, wait a minute. There's no people. That's not a people job. And the interaction with other people is something I find extremely rewarding with anything I've ever done. When I was a teenager, for example, I worked in a restaurant for 5 years, a seasonal place in York. So that kind of shared experience, right. Once you're in that environment, working with other people side by side, like, if it's for you, if you like it, you can't give that up. You'll never feel satisfied doing anything else if there's not people involved. So I thought that was going to be my path. My wife and I bought our first house, went through the process, and I saw the whole process and I paid attention. I was like, wait a minute. This is interesting. You're working with people. It's very dynamic. It's not the same every day. So I reached out to the broker who helped me buy my house. It's Ansel Cromwell. He owned Remax Realty Group, which used to be where Carrie Alex's office in Rochester is now. Yep. And he had me in the office. I emailed him. He said, yep, come on in. Took me in his conference room, closed the door, and then tried to scare me for an hour to be like, hey, here's what the average agent does. Here's what your expenses are. Here's what you're going to walk away with.
You don't want to do this.
Yeah. And it was like I almost feel like they tried to get the hooks in you to some extent. And he was like, just don't do it. It's not worth it. Yeah. And I'm like, yep, I'm going to do it. I'm stubborn. And so I took the weekend classes while I was working full time, got my license. My license was active on February 5th of 2020. So just before. And I'll never forget, he was a Remax office at the time. So he's like, I'm going to take you to the conference, the regional conference, because you seem like you're motivated and you want to get involved and push this as far as you can. It's like, oh, they said it's in the greater Boston area. Let's see the details. It's in Worcester, of course.
Yeah, like greater For like, people in Worcester, that's the greater Boston area. Yeah, right. For people in Boston, I'm like, it is not.
Hold on a minute. But so we go down, and it was so funny because when you walked in and got your little name tag, they're like, oh, you have to use hand sanitizer before you come in. That was our big COVID safe.
Yeah.
It was like
elbows.
It was like March 3rd of 2020, I think, something like that. Did the conference, got all kinds of great ideas. I want to say that was a Friday or over a weekend or something like that. The next week, everything shut down.
Yep.
It's like, whoa.
Yeah.
Okay. And then it just, like we were talking about, the rest is history. But the getting in, and I believe, I'd have to go back and look at the dates, but I think I got my first buyer under contract before that. It was a little condo, if you know those 55 plus condos off of 10 Rod Road in Rochester.
Okay.
It was one of those. And then I remember the closing for that was in April, and we did it in the parking lot with everyone in their cars, and it was downpouring out. It was crazy. So the poor closer was standing there with an umbrella like 10 feet back from the window, waiting to see, oh, do you have any questions? Is there anything I can answer?
Because they hand you through the car door.
Crazy.
Oh my goodness.
I did so many of those. I don't know how many you ended up with at that point, but
they wouldn't allow me to go to closings.
That's true.
Even if they were outdoors, they were like, no. I mean, it was probably August before I went to, although I went, so I had 3 loans that closed in March of 2020. My very first 3 loans. First one was March 5th. I remember it because forever. March 5th, 2020, first loan. I went to that. I had another one like a week later. I went to that closing, and I had one at the end of March, which I was not allowed to.
Yep.
and that was like a driveway closing they did. I don't remember all the details of it, but so from there, I didn't have a closing that I was allowed to go to until like August. And I feel like even the one I went to in August, they went inside, but we weren't allowed to go inside. Like we pretty much just stood outside with, hey, congratulations signs,
exactly.
Like that's really what it was. I brought a gift and I think they must have, like Lysoled it or something before they put it in their car. Like that's what that was. And then, of course things started loosening up and then we could go to them and they would allow us in there with a mask on
Well, the crazy thing was like showings and open houses at that point, because somehow the first lead I ever called, the first inquiry I ever responded to was my first buyer and my first seller. And when I was showing his house, we had to all be separate and masks, and it was crazy. And then there were the scheduled open houses that some people would
do. 15 minutes to walk through.
Yeah. And so like just thinking, like, let's talk about from kind of that point of us just getting started, the start of COVID through the end of 2020, that was the wild, wild west that entire time, because both of us getting used to learning the job, getting used to it, but just what was going on in the market, because once the initial lockdown stopped, the floodgates, I don't know that we'll ever see. I'm sure everyone said this at some point with different market conditions, but I don't know if we'll ever see that again. Maybe not in my lifetime, or there'll have to be some crazy event.
Well, I don't want to ever see that again, because if we were seeing it again, some crazy something was happening, right? People, 3%, 2% rates, I want to see that. No, you don't. Because the reason there were 3% and 2% rates were because the world was ending. Yeah. Right? Like we don't want to see that.
And I think on one of our future episodes, we're going to talk about like the housing crisis and how that kind of got wrapped together and how rates had a whole effect on that.
3-hour-long episode, practically.
But when we jumped in, and like I'm just thinking about the open houses with like 50 cars in front of them, and just the pure insanity that started, but the prices hadn't, because of the gap there in 2020. And I'm sure you can look at the numbers and see what this actually looks like. But 2020 wasn't when the prices went completely bananas. It is when it started.
Houses were still affordable in 2020.
My first listing, I'll give you a great example of this. It was on Deer Ridge Road in Barrington. It was a 3-2, nice place with a huge 2-car garage on 2 acres that sold for $387. Thinking about that today,
$600,000 house now,
almost $7. Jesus. Which is, and that kind of goes into the future housing crisis conversation. Right. So 2020 really was before, like another one I did in 2020 was a condo in Woodland Green in Rochester on the buy side. And I remember it set a price record for that association. And those condos currently sell for over twice what that one sold for at that time. But it was, the number of people, and it was crazy. And just trying to learn in that environment. And once you could kind of be in person and things again, you said like August is when they started letting you at closings.
Yeah, I remember it was hot out. Yeah, I was standing outside and it was hot out, so I'm going to assume it was August. I could go back in my records and see, but that's what I'm thinking if I remember correctly. Because the first, I know for me, like pretty much all of April, May, and June, I only left the house like once a month, and that was to go get provisions in town, right? I had a pickup truck at the time, and I literally would go out and I would drop $1,500 in one day and get the, toilet paper, if you could find it, and the paper towels, and I would get, food, whatever food was going to last a whole month, because I didn't want to go back out again, and I'd stand in line to get into Market Basket or to get into Target or whatever.
I'm gonna point out a funny story from back then, not housing related at all, but just from the pandemic, right? Because 5 years on, it's just crazy to remember these things. I remember the night in March watching what was happening, watching the news, and I turned to my wife and said, hey, this seems like it could be one of those pandemic movies, but in real life. And we didn't know what the mortality rate was. We didn't know how dangerous it was. We didn't know anything at that point. So I said, hey, we need to be ready to stay in this house and not leave for a very long time if we need to. We had some supplies, but not enough. And so we went to Walmart. It was like 10 p.m., I think.
That same night?
Yeah, and it was complete. Well, we had the conversation at like 8 maybe.
Yeah.
And they were completely cleaned out. But if you look just the tiniest bit further, like my favorite example, there's a couple of them, but go to the pasta aisle, empty. But as much whole wheat pasta as you'd like. As you could buy as much whole wheat pasta as you want. No
because
regular.
You know what Americans don't want? Whole wheat, anything.
Canned soup, gone. Cans of corned beef hash, as many as you want. It's like, it was just so funny to look at. Bread and milk, empty. You know what I mean?
Yeah. And don't even get me started on toilet paper.
Oh, so my wife, she was at the time working in pharmacy in a Rite Aid, and she would see like elderly people getting in just about fist fights over toilet paper. Just to think about that,
Crazy.
Unbelievable. I think that was probably the biggest boon for the bidet industry that's ever happened was COVID. But
see, the Europeans had it right all along.
Incredible, truly.
But it's think about like 2020. We talk about like the market then. So it was a curse and a blessing at the same time, right? Short-term curse, long-term blessing for me. But I was brand new.
Yep.
I had no database. And what was huge business in the lending world in 2020 and 2021 was refis.
Yep.
Right. I didn't have anybody to refinance. The people that, the few people that I put into houses in March, April, and May were in, 3s and 4s.
Yep.
They weren't refinancing into 2s.
No.
So I had to pound the pavement to find refinances, which wasn't hard, but I didn't have a database to call on. It was family and friends and people I knew and like, hey, refinance, right? Yep. Or the few I think I did some Facebook ads and got a few out of that, little things like that. But because I didn't have that for refis, all these loan officers were just so inundated with refinances, making crazy money doing, and I'm like, I want to be able to do that, but I didn't have the databases to do it with. So I still had to focus on purchases. So much like me calling you in March or whenever it was, or April, whenever I did, I had to still focus on purchase volume. And there were so many realtors that I talked to. They're like, yeah, my lender won't call me back because they were so busy doing refis. So I feel like
crazy.
I was able to pick up realtor connections at that time and work purchases because the lenders that they had worked with weren't taking their calls because they were so busy doing refis.
And you were still getting up and putting your running shoes on every day.
Exactly. So I had to still pound that pavement, virtually, but I did. And I was getting on Zooms and I was doing all this stuff to meet with realtors that their lenders weren't calling them back.
Yep.
So I still had really, really strong purchase volume during 2020. I still had a lot of refis too. Don't get me wrong, because I was able to drum them up, but so many people just turned into refi shops.
Yep.
They said, well, we're just going to run refis. And that was what we were going to do. And all good and fine, but also refis were taking forever because they were getting pushed to the back burner over the purchases. So my deals were closing faster because I was doing more purchases during 2020 and even 2021 to an extent than all these people that were just doing refis that were having to take so long to get them closed.
You've reminded me of something. Just having this conversation brings up so many memories from that time. Remember how long appraisals used to take?
Oh, if I got an appraisal back in 6 weeks, I was lucky.
Seriously.
You're like like now we talk about, so like one of my big things with Total is like, 21-day closes, right? We do super fast closes. I mean, if we were closing within 60 days on a purchase back then, that was a fast close. It was
100%.
It was SAR because the entire, like all the underwriters were so inundated with loans. The appraisers, which we did not and still don't really have enough of, were taking so long and people didn't want them in their houses.
And forget about it. If it was a VA appraisal, there's so few VA appraisers, so it was just impossible.
Right, because you and I do a fair amount of VA loans, and there's no way.
No.
There's no way. It was took so long. And we were actually lucky. Look at, like, there were places like Vermont, 12 weeks, and you were paying $3,500 to get it. Just because that's what they could charge because people are going to pay it.
I remember seeing people pay $1,200 and $1,500 for rush orders that would be turned around within 3 weeks or something like that.
Yeah,
just
rush order.
Unbelievable to think about. But then, so we got through 2020. 2021 was, I think, of all the years of like the pandemic era housing market, from the last couple of months of 2020 through, let's say, the early summer of 2022 was the absolute peak insanity. That was that was the most overheated, the absolute worst that it ever was.
Yeah, that was 2021 was crazy. It's still 2021 is the most volume I've ever done.
Yeah.
I haven't gotten back to that 2021 level. And it was that year. I mean, 2020, we can sit here because we were sitting at home, but 2021, we were actually back out and doing stuff, and it was busier than 2020. I mean, that year was a blur to me. I don't remember anything that happened in 2021.
I distinctly remember I sat an open house in, I think it was Grantham, New Hampshire. There's like a big lake community out there. Okay. There's an open house for a foreclosure, which there was like 2 of at that time in the whole state. And it was sitting it for another agent of mine at my office. In 2 hours, we had like 130 groups come through. something like that. And almost everyone
in Grantham, which like the middle of nowhere.
Yeah, for context, if someone who doesn't have a map in front of them, that's not like 2 feet away from Manchester.
No, that's way up. Like that's out there.
And almost every single person who stepped in was from New York, and of them, almost everyone was from Long Island. And when I would talk to those people, and we'll again in a future housing crisis episode, we'll talk about the details, but they were all like, "Hey, I'm paying this much for a 1,000 square foot apartment that I haven't been able to leave. Why would I continue to do that when my job is remote now?"
Right. It's virtual. I can come here. I can do my job and be in the woods.
Yeah.
And be able to go outside and breathe fresh air.
And look at a beautiful lake every day.
Yeah.
Instead of being right in the middle of the city and I can't do anything.
What could go wrong?
Yeah, seriously, right? And it was a generational thing too, because a lot of those people were renting.
Mm-hmm.
You know, the millennials in general, which is interesting because you're the geriatric millennials. We'll say.
Yeah, I like to say elder millennial, but okay,
okay.
Whatever.
But then I'm at the very tail end of the millennial generation,
right.
And if you go back and look at like 2016, 2017, all the headlines were the millennials aren't buying houses, and COVID was just kind of the kick to be like, oh, hey, I want my own space. My own space is super valuable.
Yeah, but they weren't buying it in cities, though.
No.
They're buying it outside the city.
No, they were buying it just I mean, just thinking about the places I went in 2021 and the open houses I saw and you had 15 minutes to look at a house. It was it was an unhealthy market. It was crazy to live through it, but it was not good for anybody involved. Like 15 minutes to look at a house.
Yeah.
I remember the first time I saw a house that got 20 offers. I was like, what? How is this possible? There are 20 people who want to buy this house and only one person's going to get it. The worst I ever saw was a place on Salmon Falls Road in Rochester, a listing I had 38 offers on that place. And
you're in your commission on that one, just reading through the offers. My God.
So, and I'm not, not to speak badly about myself, but I'm not going to claim in early 2022 I was God's gift to real estate.
I mean,
that was maybe now, I don't know, but the craziness of it. And this house was a 3-2 split level, 3 beds, 2 baths, split level, a normal house, and it 38 offers on it. Are you kidding me? And that same house sold for $100,000 more than it sold for.
Well, that was the other thing. It's not even that people are putting in an offer. Oh, this house is $350. We're going to offer $360. No. They're saying this house is $350. Here's $500,000 for it.
No inspections, no appraisal.
Yeah, we're not doing anything. Here's your cash. Boom. Well, and because you said these people from Long Island, they're renters, but some of them had owned houses. They sold their $1 million house in Long Island and moved and bought a $500,000 house here cash. Because it was so much cheaper for us. It's like these houses are so expensive. But for somebody coming from, Metro Boston or somebody coming from, Metro New York, super cheap.
And then, so here's what I wanted to get to, because I think it'll be interesting. I know my perspective on it. I know what it felt like for me, but I don't think we've ever talked about this, which is, what did it feel like mid 2022 when all of a sudden it was, hey, inflation's a thing, interest rates are skyrocketing very, very quickly. I mean, I believe that is the fastest they've ever gone up in history.
Yeah, it felt like I got a second job. And I don't mean it felt like, I actually got a second job. So, I mean, like when I left working in restaurants. And in, I think, March or April of 2022, I saw the writing on the wall. Like it was still okay, but it was like rates were starting to trick up. It's like, okay, this market is going away. There's something's happening here. It's changing. And so, we saw that inflation, we saw all this. It's just like there's something happening here. And I'm like, I'm not getting as many calls as I was getting. I'm not getting as many deals under. The refis were drying up. Everybody that was going to refinance to their 2.5% rate had done it already. And now those rates weren't available anymore. And I'm like, wow, what am I going to do? And it was like a fever dream for 2 years of just nonstop, drinking through a fire hose. And then it just felt like it just stopped. And I went, oh no, what am I going to do? So I actually called up a friend that I knew from the restaurant. I said, hey, do you have a spot for me to come and wait tables a couple nights a week? And I did it for the next year. From I think it was May of 2022 until I think like June-ish of 2023 that I part-time a couple nights a week. But I worked, it was a place in downtown Portsmouth. So I could, make quick, easy, good money there. And I worked there for pretty much a year part-time while that crash happened.
Yeah.
You know, and I still, of course, did, but 2022, looking back, is still the worst year I've had in my career, you know, because it came to a screeching halt, which actually, looking back now and with hopes that, you know, we're coming out of it potentially. Like, I'm seeing good signs. We don't know, but yeah, seriously, knock on whatever you can. But having been in that crazy COVID market where everything, like, it was through the roof, and then seeing what the other side of the coin looked like, I feel has set. I mean, I don't know if you feel the same way, but it sets me up now that I see what both sides look like.
Absolutely.
You know what I mean? So I feel like I'm more prepared in my life in this career to deal with whatever's going to come my way now.
The crazy thing with it is that there was no housing recession. There was a housing industry recession when that happened.
Right.
Because, so call it June of 2022 all the way through all of 2023, I would say was about the same, roughly. It ebbed and flowed, but it was roughly about the same. And the crazy part is, like, we saw, say, the beginning of COVID, rates dipped, so everyone's mortgage payments dipped, and then values increased. And then 2022 happens. It's like, hey, by the way, rates went from 2.5 to 6, and everyone's payments went here, and it cut out so much of the market at once that, like you're talking about in terms of the number of transactions happening. I think the thing that nobody was prepared for is that the prices didn't change.
Well, that's just it. And though there were fewer buyers, there was still heavy competition, and there was no inventory, because now people with that 2.5% rate are not going to sell their house.
It's me.
It's you, right? No, it's seriously, like, you're not going to sell your house and get your sub 3% rate, give it away to more than double.
Yeah.
Right. Because you, like, either whether you can afford it or not, it's just terrible financial choices, right? Okay, I can imagine, I can just see this, like, sea of financial advisors going, don't sell your house, right? So now the people that might have upgraded or might have said, well, let's buy a house because I want a little more land, or let's buy a house because I want a garage, or whatever the case may be, or even I have a growing family and I need more bedrooms, they're stacking bunk beds now.
Exactly.
Right? They're not going to sell that house. And so the potential sellers went away. Like, people always say, oh, well, it was just like 2008. It was nothing like 2008. Nothing like 2008, because in 2008 there was too much inventory because everybody was being foreclosed on, because people in my industry, before I was in it, so it's not my fault, but people in my industry were giving out really crappy loans to people that couldn't afford it, right? They were doing no income. Oh, you don't, whatever, you know, they're just, here you go, passing them out like water. And then they all said, oh, I can't afford the 3 mortgages that I have now.
Watch The Big Short.
Yeah, The Big Short. No, seriously.
Great representation of what happened.
Every so often when I feel disenchanted with the current market, I watch The Big Short and I go, it could be worse.
Yeah.
But it's true, because what happened was that there was mass foreclosures. So house values plummeted. There was a huge buyer's market because sellers couldn't sell their houses. Even if they were underwater and trying to, they couldn't get their houses sold because people were going, well, I don't want to buy a house. It's right now. So, and I mean, I talked to loan officers at that time and they say it was like somebody turned off the tap overnight.
Yep.
It was just boom, off. Like, we had at least a little bit, like I said, like, I saw the writing on the wall. We're like, okay, something's happening here. I need to look into secondary income because I can see that I'm not going to have as much going on this summer. Like, I don't think there was no warning to them, unless you were really paying attention, like in The Big Short, right? Most people were like, that's never going to happen. We're zooming. It's great. No, yeah, mortgages are the safest thing. And it's whatever. Anyway, we all know that. But this market was so different because their house values were still going up. The buyers were still wanting to buy. Sellers just didn't want to sell.
The crazy part with it that everybody misses is values went up. Rates went up. Suddenly your average payment, your housing payment every month,
way up,
skyrocketed. And that cut a huge number of people out of the market.
Yeah.
The problem is it doesn't functionally matter. This is a really important point. It doesn't functionally matter if there's 25 buyers for the same house or if there's 5.
Because one person's getting it.
Exactly.
Yeah.
If there's more than one offer on a house, the prices are being driven up.
I mean, in a way, there were, like, it took out some buyers, but it didn't take out enough.
No.
And I don't know if we could have gotten to a point where it would take out enough just because of the absolute lack of inventory.
Yeah.
And we're still dealing with it now. Like we'll probably have a whole nother episode talking about that, but we still don't have enough inventory.
Nope.
And that's the key issue to fixing this market. It's not rates. Because here's the thing, 7%, 6%, 5%, 8%. People are going to pay whatever they're going to pay because they'll just refinance later.
Mm-hmm.
But house value of the house, that's not going down.
I've also
anytime soon, at least, it's not going down.
No, and I've also we'll talk about that because people will say, oh, the ebbs and flows of the market, the this, to that. Go look at what happened. I love using Dover as an example. Go look at Dover, New Hampshire in the 2008 crash versus the rest of the country. We live in a weird area. It's so insulated from so many economic conditions because you've got tons of defense industry, you've got the shipyard, you've got all of this stuff in a very affluent area that are jobs that don't change, that just stay there. So that's a whole other side thing. But a lot of people got super fixated on rates as opposed to just housing affordability in general at that point. And that's when you started hearing the marry the house, date the rate nonsense,
which is a terrible saying, but honestly, kind of true.
It is true to some extent, but I always tell people, like, you need to be able to afford it today, right now, forever.
Right. Don't buy it if you can't afford it because then you're going to just lose it.
If we had $10 for every single time we heard someone say, oh, rates are going down in the next 6 months, and then it was like, you know what I mean? It just, it would constantly.
But I mean, you have these people though, that a lot of people, especially first time home buyers, and I feel for them and I get it because this is a tough market, a tough time, and especially where we are, like, Southern New Hampshire, it's next to impossible to buy a house. It really is.
Yeah.
And I'm not saying it to deter people because no, I want you to do it. I want you to come to me and I want you to pre-approve it. And I want you to, like, let's go. We're going to make it work. Even if it takes 2 years. Like we just closed a deal with some people that it took 2 years for them to find the right house that was affordable for them. Right.
Let's talk about that for a second, because that's an important one, because they did everything right. They listened to every single piece of tactical advice, and the tactical advice is not, buy the house. Look at isn't this house perfect? You should buy it. That's not the tactical advice. The advice is, number one, before you ever look at anything, have all your ducks in a row. And that doesn't just mean you have your pre-approval in your hand. That means that,
though it's important.
It is important, but it's, you have your pre-approval in your hand and you talk to someone like Bill and say, hey, let's talk about how property taxes, let's talk about insurance, how that affects my mortgage payment. Let's talk about buy down options. Like, let's see, as opposed to walking up to the food truck and being like, oh, you only serve one thing. Let's look at the full menu and understand what all of the options look like first. Because like, that's number one. Number two is getting your criteria like nailed down and dialed in. You can't be distracted, and you need to know what right looks like when it pops up.
Yeah. Well, and you also need to be okay with, if you're buying your first home, it may not have everything you want for your forever home.
No.
And this is, I mean, these particular buyers, we had this conversation with them. They understand this is probably not the house they're going to live in forever.
Yeah.
Because
100%.
there are other things they may want, but the fact is, buy it now, because first of all, now you're paying your mortgage instead of your landlord's mortgage. You're making equity in your house instead of equity in somebody else's house, so do that, get something that may not be exactly what you want, but it's good enough for now, because then you build that equity over a few years and then you can sell that, take that equity and make a much higher down payment on your next house that maybe is the right house, that perfect house.
The struggle that we see, and we'll get back to more of the timelines, but let's say from rates going up in mid-2022 to now, the market has improved slightly since mid-2022. Like, generally, it's been on an upward trend in terms of number of transactions, but when you drop to almost nothing and you're like, it's 8% better this year, it's like, okay, well, it's 8% better than...
Than zero.
It's incredible. But it's the difference, like, there's a huge difference in the market and a clear divide between someone who already owns the asset, the house, and somebody who doesn't. And getting your foot in the door, that's the part that is an absolute struggle. Because if you've already been in the market, it's like, not financial advice by any means, but if you ever speak to someone who's savvy with stocks, it's not timing the market, it's time in the market. And it's it's literally the same thing as as housing, because if you bought a house at the absolute worst possible time, right before the lead up to the last housing crash of 2008, if you sold it 10 years later, you were ahead. 99% of zip codes, you were ahead. I don't want to speak completely but broadly.
There's always going to be outliers.
There's always outliers, but the outlier doesn't disprove the rule.
Right.
You know what I mean? So that's something that gets, I don't want to say it gets lost, but I guess we have to talk about the importance of it, because the gentleman who I talked about buying that condo in Woodland Green that he paid $134, I want to say he had, I know, right?
Can you imagine? That's how I feel. It's funny because that number, it persists in my head. Like, I think it was like 135 was my very first transaction that I closed in March of 2020. And it was a condo in Concord. And I mean, those condos way more now.
It was 134 and we had to pay some appraisal gap.
That's
and he had a change of life circumstance a year later and sold it almost exactly 365 days later to the day.
Yeah.
For $185.
Yeah, because just that
$50,000 in 1 year.
Yep.
Yeah. And so like that insane level of appreciation is gone. I don't think we're going to see it. It would take a massive thing that would be a crazy news story that you'd see for that to happen.
Home values they're continuing to go up, but not.
No, I think
at that pace.
The most conservative 5-year outlook is 3%, 4% a year. Like that's the worst case right now,
which is fine.
And that's not to say something can't happen and all that, but when you look at, I mean, you buy the median priced home in New Hampshire, if you're getting 3% a year compounded for 5 years, that's bananas. Mm-hmm. It really is. But so we got through mid 2022, 2023. Last year, things kind of continued on the upward trend in terms of.
Yeah, no, last year was I don't want to say good year, much better year.
Yeah.
Right. Yeah. I think that number one, I think that buyers have gotten used to the rate. I always compare it to gas prices, right? So on our way here today, I stopped and got gas for $2.97 a gallon.
Mm-hmm.
Okay. That's pretty good price right now. I also mentioned today that when I first got my driver's license, I won't say how many years ago.
It was several.
More than one. There was gas prices went down to 99 cents a gallon.
Mm-hmm.
So I was paying 99 cents a gallon. So the idea of paying 3 times that would have never, ever even occurred to me. But now under $3, we're going, woo, because we've gotten used to it.
Well,
right?
So let's talk about that for a second, because this is something a lot of people don't talk about when it comes to just what it feels like to interact with the market today. We lived through a period of pretty extreme inflation for several years.
Yep.
And home prices were at the forefront of that. And New Hampshire was at the forefront of that. So I think it's like 67% over the past 5 years on average for New Hampshire. And it's the experience that we have with that is in 2022, $300,000 could get you a single family home in Stratford County that no problem, a starter home that, could use some work and wasn't crazy, but $300,000 you could do it. That same house you could probably get for about $190 in 2019.
Yeah.
That same house today, if the price starts with a 3, it's like piranhas on it.
Yeah. My house that I bought in 2017, I bought it for $189.
Mm-hmm.
I haven't looked at what market values are on it, but the town last year just did a reassessment and they assessed it at $387.
Yep.
And we know that town assessments generally are less than what the market can bear.
Yep.
So I'm probably over 400.
Oh yeah.
You know what I mean? For my house that I paid less than half of that for just 7.5 years ago.
That's an important thing to note too, is that appreciate, people say, oh, like I just did, 67% in New Hampshire over the past 5 years. It is not the same at each piece of the market. The low end has gone up far more than the high end has. That, I mean, just thinking about, like I said, 2019 versus what, even any year other than 2020, it didn't go completely crazy. But so the low end, the normal houses, for the lack of a better term, it's just gotten absolutely insane. But last year, I think we really leaned into aggressively using New Hampshire housing's products a lot more. And that started to, we could feel
all
the
my
difference.
Friends in New Hampshire housing just went, woo!
Yeah, right. It's
I mean, utilize the tools you have, right?
Exactly. And we could feel the impact of that and how much of a difference it made, because it was, like 99% of the time, if someone was using it, it was literally the difference between them being able to buy a house and not.
Yeah. Well, and I mean, here's the thing. HFAs, like housing finance authorities, every state has their own version of it, right? Some are good, some are not as good. I'm not going to call the ones that aren't as good, but I will say New Hampshire Housing has a really fantastic program, right? And it's accessible to a lot of people, and it makes homeownership affordable.
Absolutely.
Right? Like it literally, like you're right. I mean, you'll talk to people that have been pre-approved with a VA loan. Oh, they got pre-approved for a VA loan and their rate is this, and I come in at like a whole point lower.
Yep.
Because I can use New Hampshire Housing and another lender couldn't. You know, like that's huge.
Or you can cash assistance,
or the cash assistance that people don't, right? If people don't have it, here's nothing out of pocket. Here's your cash assistance. We've had multiple deals, especially VA loans, zero down VA loans, multiple deals where the buyer gets a check at closing instead of bringing a check.
100%.
Because they're getting refunded for what they've put into the transaction, like their appraisal fee or their earnest money deposit. They're getting that money back at closing because they got the cash assistance that covered all of their closing costs and they had a zero down VA loan.
I'll say New Hampshire Housing, just the programs they have, I would go a step further. I wouldn't say makes, for a lot of people, it's not even a matter of it making housing affordable. It is literally the binary difference between can you be a homeowner or can you not be? Because with the rate of appreciation, like there's a lot of people who are in that situation where if they don't do something soon, it's going to take them a long time to be able to get there.
Right.
Do not take that as the listener as me saying, oh, you need to do something right now. You need to do something outside of your comfort zone. That's not what I mean by that at all. But what I mean is that there's actually programs that exist that can bridge that gap and make that.
Well, their tagline is "We make homeownership happen," and you know what? That is the perfect tagline because they absolutely do.
100%.
Absolutely do. And it just comes down to, and okay. Let me back up a little bit. I'm really glad that I got involved with learning about their program so early on in my career because my very first loan that I did was a New Hampshire Housing loan. Okay, and this is when they just had two programs. They had a government program and then they had a conventional program.
I didn't know.
And that was it. And it was a percentage of their loan amount was their cash assistance. So it wasn't a lot, but it was enough to help, right? They've completely revamped their programs in the last 5 years. They have a new bond program, new, I mean, years old now, but they brought in this bond program with way lower rates for first-time home buyers. Although if you're a veteran, you don't need to be a first-time home buyer or buying in a targeted community. Yep. And then they revamped their cash assistance program. So now you can get $5,000, $10,000 or $15,000 versus a percentage. So somebody that's buying a less expensive house could still get $15,000 and covers everything. Right. So, I mean, that it truly has, I mean, if you're in my career, New Hampshire Housing has been a huge, I don't know what word I want
resource
to use, but just a resource, but also it's pushed me to that next level.
Yeah, 100%.
Because I can use their programs.
I didn't know anything about it until you told me about it. And I remember
you're welcome, New Hampshire Housing.
Yeah, seriously, right? But you came to my office and we chatted about it, and you went through the details with it. And I don't know if you remember the look on my face the whole time because I was like, "Are you kidding me? This is." Right. Really?
Yeah. And that's the look on most people's faces when I tell them about it. Because the fact is, now these programs have been around for years now. They haven't really changed much in the last few years. And so many realtors or potential homeowners don't even know about it.
Yeah.
And which I don't understand, but I'm here. I'm here to help.
Like one of the most important things to know is that if you're a veteran and you're trying to buy a house in New Hampshire Housing 9 times out of 10 is the answer, because you can either get a way below market interest rate or you can get cash assistance so that the closing costs you have as a veteran for a VA loan, because it's 0% down, but you still have out-of-pocket expenses.
Closing costs, yeah.
You can either have a below market interest rate or your closing costs up to $15,000 are being contributed to for New Hampshire Housing.
I'm not going to say but most people's closing costs aren't going to go beyond that.
No. So,
unless they're buying a far more expensive house.
So you're talking about buying something at that point for possibly $0 out of pocket.
Right.
Like that's super important. And that's not just veterans. Someone using an FHA loan can do something very similar.
Yeah. 3.5% down and get $15,000 is going to cover your down payment. So now you're just bringing closing costs. And then if you can work with your realtor to say, hey, let's see if we can figure out a way to do a seller credit to cover closing costs. Now you're also zero out of pocket.
Absolutely.
So I always tell people, so I have this way that I talk with first time home buyers about like this triangle, right? I think of like being approved for a loan is a triangle, right? You have credit, you have assets, and you have income.
Yep.
Credit is kind of like the most important because you have to have the minimum qualifying credit scores for these programs, right? So like New Hampshire Housing's a 620 credit score, which is not even that high of a credit score, right? But it gets you in the door, right?
For New Hampshire Housing now, just to be specific about it, is there gradations to it? Like, oh, if you have a 700, then it's 620, it's pass fail.
620 it's pass fail. So because they set their rates, and the rate is the rate.
So as long as
no
you have
matter
a
how much you put
good.
down, no matter what your credit score is, as long as you're hitting minimum qualifiers, you have a minimum credit score of 620. You are putting down a minimum down payment for the program, which could be 0 down, it could be 3.5%, it could be 3% down, could be 5%, depending on the program. And then there's income qualifiers, so you have to be under a certain income. But like the high end with certain targeted communities, it's like $167,000 as of right now. I mean, it changes yearly.
You know,
but that's a pretty good income, and you still qualify for this program.
And it's with the credit score. It's as long as you check the box, you're in the door. It's not.
Yeah, I mean, you have to so we'll not get too technical here, but so when I pre-approve somebody, I go through and they have a 620 credit score that's their minimum. There's qualifiers that are more algorithm based. So when I put them through what's called an automated underwriting system, so through Fannie Mae and Freddie Mac both have their own versions, and you put them through the automated underwriting system, they have algorithms that say if this is a loan that they'll accept or not. Right. So somebody has a 620 credit score, but they've got a lot of open collections and they've got a lot of really derogatory stuff that's recent. They might say, at 3% down, we're not going to qualify you for this conventional loan. They might qualify you for a VA or an FHA loan that has a little bit more leniency with credit, right? Everybody's situation is different. So it's really hard to give a hard and fast, you need to have this. But for for New Hampshire Housing's purposes, as long as you have the minimum score and I've put you through the system and they say, and Freddie Mac or Fannie Mae gives you the thumbs up, then you're good.
You know what's funny is we had a couple boxes we wanted to check with this conversation when we came in today, and a commercial for New Hampshire Housing was not one of them.
So not even part of our conversation.
It's so funny. We literally never spoke a word of this on the way here.
No.
But it really made such a huge difference last year.
It did. Well, because with rates so high, the rates that we were able to provide through the New Hampshire Housing Program actually made homeownership affordable for so many
100%.
people that would absolutely have not been able to do it otherwise. The rates and the cash assistance.
New Hampshire Housing, tag me if you share this.
Yeah.
Seriously.
No, but so my point with the credit asset income thing that I was saying was that triangle, right? So credit on the top, credit's kind of the most important. You have to have a minimum credit qualifying, right? Income is really, as long as you have income, that's qualifying income, and that gets into a lot more details, but it's only really going to dictate how much of a loan you can qualify for, right? The asset part of it is when people are like, oh, I don't have enough money, I need my 20%, which is so not the case anymore, right? You have so many programs, you don't need 20% down. But like they think that they need so much money, and so they don't even try. And you and I have talked to many people, we've closed loans or many people that have, $20 in their bank account, right? And they can get a gift or they get the cash assistance, they get whatever, and they can buy a house. Cause that's the part of the triangle that's the easiest to overcome.
Yep.
When we have these programs, the DPA programs, down payment assistance, when we have cashes, when we have the ability to ask for a seller credit to cover closing costs, when we have all of those tools in our toolbox, that's the easiest one to overcome.
It's funny because I think for most people on the outside looking in, they'd say, yeah, how much money I have in my bank account is the hardest one to take care of.
Nope.
And I'll make the argument that usually income and DTI is the hardest thing to overcome in a lot of circumstances.
Well, and again, income and DTI, it only affects how much you qualify for, right? You qualifying to be pre-approved for a loan is not going to be incumbent upon how much you make. Now, there are certain qualifiers in terms of like, is this have you had a job long enough? And, what kind of income you had? Like, there are those things, right? They're involved in it. But somebody that makes $40,000 a year or somebody that makes $150,000 a year may still get pre-approved for the loan because they have the credit they need, they have whatever. It's a matter of the person that makes $150,000 a year is going to get qualified for a higher loan amount.
Yeah, exactly.
Right. And so it's not about a yes or no. It's about how much. Now, again, going back to this market, I have people that come to me and I go, yeah, I can qualify you for a loan. You're pre-approved. Here's your pre-approval letter for $150,000. Guess what? that pre-approval letter, in most circumstances, I might as well have just said to them, you can't get a house.
And that's one of the struggles in the current market, because someone with an 850 credit score, or I think they increased the maximum credit score,
whatever it is.
Well, but a perfect credit score, let's say, but that doesn't have the income, is going to be way more limited than someone who has a somewhat middle of the road credit score.
They could have a 640 credit score, but as long as they make good money, they can maybe qualify for a more of a house just because of that. So income and DTI matter. I mean, certainly debt matters with that too, because you have really high income, but you could have a lot of debt, because guess what? You go to buy that BMW for a $1,400 a month car payment. Well, guess what? You just cut your DTI.
Yeah,
that's income.
Let's talk about that DTI, because that's something that I think people hear and they don't quite grasp, like what we're talking about when someone just references that. So, and I'll say it in my own words, and then you'll tell me I'm completely wrong and correct me on this. But debt to income is just talking about, all right, so let's say I make $5,000 a month, and then I have a $1,000 a month car payment. There's so many people who have that nowadays. So then I have $4,000 left over. So my debt to income ratio is then you essentially take the debt payment off, your monthly debt service payment off of your income, and then you divide that income by whatever the maximum percentage for the loan amount is. And that's basically what your top end is.
So to give you a good scenario, right? So I have somebody that makes, I'm just going to use really easily dividable numbers. This person makes $10,000 a month, right? So I've gone through, I figure out they make $10,000 a month. The first thing I'm going to do is I'm going to say, most programs are only going to let you go up to 50%. Some are going to be a little bit less. Some are going to be slightly more, depending on the program. But let's just say on average, 50% debt to income.
So we're already dropped down to $5,000 a month.
So now we're dropped down to $5,000 a month is your maximum mortgage payment,
all
potentially,
in with interest,
right? But now you have to say, well, okay, I have that $1,000 a month car payment. Well, that drops it to $4,000, and I've got I've got $500 a month in student loans. Well, that drops to $3,500, and now I've got credit cards where I have $300 in minimum payments. Now that drops it to $3,200, right? And by the way, credit cards, I always talk to people and I go, okay, well, what do you have for debt with credit? Well, I've got $5,000 on this card. I don't care what your credit card balances. I mean, I care, but I don't care, right? DTI doesn't care how much you owe. They care what your monthly payment is. And it doesn't matter what you pay monthly, what your minimum is. Because their whole point is, if you had no money, what bills do you have that aren't going to go getting paid, right? So you might have $5,000 on a credit card, but their minimum payment might only be $45 a month. So you're only using that $45 a month. Even if you make $500 a month payments right now to pay it down, it's the minimum payment that shows on that report. It shows on your credit report when I pull it, but it also shows, like, if you look at your bank statement, your credit card statement, it's going to say, okay, this is what your transactions were for the month. This is what your balance is, but your minimum payment is this.
So is it a fair statement to say then that pretty much every dollar of monthly debt service that you have, that's like a recurring thing, that we're not talking about phone bills here, but let's say your car bill, for example, every dollar you're spending on that directly is taking away a dollar that you can be spending on a house.
Correct. Yeah.
For your purposes.
So somebody that's saying, I want to buy a house in the next 5 years. Yeah, definitely. You're like, well, I need to save money. Yeah, save money. Yeah, I need to work on my credit. Yeah, work on your credit. Have the best credit possible, but also lower your monthly debt. Lower your monthly debt. Get the less expensive car payment, or pay off your car. Get rid of your student loans, pay off your student loans, or pay down credit cards so that your minimum balance is lower, right? Yep. The last thing you want to do a month before you decide to buy a house is go buy that new car with $1,000 a month car payment.
No, you actually want to do that 2 days after you go under contract on your house, right? That's the perfect time to do it. I'm being sarcastic to anybody who's watching this. Please don't do that.
I've decided I'm no longer working with Orion. No, that's an entirely different topic, but please don't buy a car while you're still doing that. Yep. Okay, please. But this could go into much further details. I think that we've probably spent a lot more time on this episode than we planned to.
Probably did. So
we probably should wrap it up. But I mean, if you're watching this and you got to the end, though, I would say, please, watch other ones that we're doing, because it's some more details we're going to be going into, much more detail in future episodes.
We're going to do this as a somewhat semi-recurring.
Yeah, I hope so.
Yeah, absolutely.
If y'all like to watch it.
Yeah.
Even if you don't, we might still do it. And,
if you got here, you liked watching it a little bit.
If you got here, you definitely liked watching it.
But Bill, this has been great.
Thank
you so much for inviting us up here to do this. And obviously Colin couldn't be here today, but we've been talking about doing this for so long. I think this is going to be fun to do this on a regular basis.
I think so too. I had fun today, so I'll keep doing it.
Beautiful.
Awesome.
That's a wrap.
Thanks so much.
Oh no, I moved the table.